Yes, people. Today is the 31st of January, the end of the month. It is a Saturday. We are going to be doing a weekly recap, not the outlook, just the recap, because this week was quite big in terms of things that happened. And yeah, it's interesting to talk about. I think it's definitely key to highlight some things and talk about what happened, why it happened, etc., and keep you guys informed if it's the kind of thing you want to be informed about. Obviously, if you're not, in the markets, then this is probably going to be a somewhat irrelevant video for you. Um, but yeah, for all the traders out there or people who are generally just interested in macroeconomics and geopolitics and financial markets, etc., this is going to be a good video. So let's just start off with what currencies have been doing, and then I'll go through individually technical analysis, etc., of what happened, that kind of stuff. So if we're talking dollar, what we're kind of thinking on dollar is there was a late week bounce, kind of reflected in the heavily violent unwind in precious metals, palladium, platinum, silver, copper, gold, and reduced uh, tail risks after Kevin Warsh was appointed or going to be appointed the new Fed chair. Well, he's put forward to lead the Federal Reserve anyway, but I see this as more of a oh my days, positioning reset rather than a genuine shift in the outlook of the dollar. The deeper pressure on the dollar now comes from like structural diversification into the euro and the risk of sharp yen appreciation tied to Japanese political and equity dynamics. Modest yield moves can't offset this kind of stuff, and it leaves rallies very vulnerable and very able to be corrected while the dollar remains capped below 97. I don't really think if we see a push above 97.75, 74, I don't think that will be sustained, but something we'll go into. Moving on to the euro. Euro strength continues to build, not through headlines or aggressive policy signals, but via steady diversification flows. Reserve managers and long term allocators are reassessing USD concentration, and the European Central Bank are showing little desire to resist appreciation given the disinflationary benefits. This is allowing the currency to gain traction as a stable alternative where acceptance of strength by policymakers turns appreciation into a feature rather than a problem. This basically just keeps the dips well supported in terms of good buying opportunities. So that's the euro. Obviously, already covered the dollar. Let's cover the pound. Summary of the pound: shit data, falling yields. The sterling remains pressured by a soft domestic macro backdrop, where there's easing inflation, weakening labour market data, and falling short end gilt yields undermining rate support. While the ongoing tension inside the Bank of England leaves markets without a clear policy narrative, it results in the pound lacking the structural inflows seen in other currencies such as euro, or the commodity tailwind supporting the Aussie dollar and the New Zealand dollar. This is increasingly behaving as a funding currency rather than a destination for actual capital. Moving on to Japanese yen. This is kind of a bit of an election wildcard, but the yen appears calm on the surface. However, it carries significant asymmetric upside risks as Japan's political backdrop and the crowded nature of the equity linked Takeshi trade means that even a modest sell off in Japanese stocks could trigger rapid repatriation and hedging flows into the yen. It kind of creates a self reinforcing appreciation cycle, and it tends to unfold quite quickly, and it's difficult for authorities to counter once underway. Moving on to the Swiss franc. Swiss franc has continued to attract defensive flows tied to political tension and geopolitical tension amid concerns around institutional credibility. Although the correction in precious metals removes speculative momentum from the hard assets, it didn't diminish the underlying reasons investors are actually seeking safety in the franc, though. The franc's appeal lies purely in political neutrality, financial stability, and capital preservation during periods of uncertainty. Now we'll cover AUD and NZD as one, as they're very linked. But they're currently really just being driven by commodity and risk sentiment. The Australian and New Zealand dollar are benefiting from the combination of supportive commodity dynamics, improving risk sentiment, USD weakness, and both currencies are offering exposure to global growth without the political and institutional baggage affecting the US and Europe. This is allowing them to capture inflows as preferred alternatives in a market seeking yield, stability, and clean macro narratives. Cover the CAD, and then we'll call the recaps a day. The CAD has mainly been driven by oil, and the support by oil has kind of offset the USD weakness. The Canadian dollar sits between rising oil prices driven by Middle East tensions and broader USD softness. It's creating a balanced profile where energy tailwind support provide support, while lack of strong domestic catalysts and the steady stance of the Bank of Canada keep moves measured. It's leaving the CAD modestly supported, but way less dynamic than its commodity peers. So, if we just quickly go over that roughly, I'm seeing my bias for the dollar is, sell the rallies unless 97.7475 breaks like decisively and we get a good close. The euro, it's my bias on the euro is just it's very well supported on dips. Structural inflows I think are just going to keep persisting. So general there is buy the dips. Pounds, mainly an underperformer, especially against the euro, the franc, and New Zealand dollar. The yen, it had or is getting asymmetric upside risk, particularly in risk off conditions. CHF, my bias is strong when political or institutional uncertainty rises, and AUD and NZD leaders while commodities and risk sentiment remain supported. I do expect to see continued downside on AUD NZD, especially at the start of the week. CAD, we're neutral to sort of slightly supported, but mainly primarily oil driven, so of course important to look out for that. Now, if we quickly cover some interesting stuff, let's just take a look at US yields because this is interesting. So red line is the start of the week, and basically what we can see is we saw a sell-off this week of about 2.3%, which is obviously quite a lot. Mainly driven by, like I said, the can't think today. Mainly going by the reducing tail risks of the dollar after Kevin Walsh was put forward to be the leader of the Federal Reserve. And, there's a lot of talk about Kevin Walsh because he isn't really seen to be like a Donald Trump crony that's going to cut rates just because Donald Trump wants them to. He was, I think, the youngest person to join the board of governors at only age 35. I think he first started at Morgan Stanley. He worked under Stanley Druckenmiller, obviously, like incredibly talented investor. One of the best of ever, probably just one of the best investors ever. And this guy is a serious inflation hawk. So I think he's not going to be like a Donald Trump crony and just agree to everything that Donald Trump wants. And I think that has led the moves. But it's interesting because what we are seeing is a bear steepener in terms of front, middle, and long end yield. So we can see the 2-year fell off a lot. The 10-year rose on the week, and the 30-year also rose on the week. Now, what does that mean? Just means that's going to support the dollar. And what happens if we overlay? If we can, US O2Y. So we can see consolidation when we dumped, consolidation, and instead of dumping, when we dumped on the 2-year, we started to rally. But if we look at US 10, look what it did here. We got the support since that turning point on the 27th. It's basically just been structurally supporting the dollar. I just think it's quite interesting to look at, obviously in accordance with the VIX. What did the VIX do? This is the start of the week here. Okay, guess I never clicked anything. This is the start of the week. Very interesting. Basically, just showing us that we're kind of risk off. Um, we had this risk on move. Risk on. It's obviously nothing is 1 to 1 as a correlation, but this is generally just what it told us. We had a bit of a a risk on environment, sort of risk off environment at the start of the week from Monday through to Tuesday. And then if you look at the dollar, that's pretty much what you can see. Monday through to Tuesday, we had a pretty much risk off sentiment. And then when we flipped on the VIX, we can see after Tuesday we rallied, increased tensions. People were trying to scale back their more risky positions, and yeah, we can see a big sort of spike in the VIX, which coincides with the dollar. Of course, we saw more inflows to the dollar after Tuesday. People seeking a bit of safe haven. Take a look at ES. This is the start of the week. And so we can see that we did see, like, everything links. Like, it's not one. It's not 1 to 1 correlated, but like everything links. Like the VIX obviously spiked downwards at the start of the week, so we were more risk on. ES then jumped. Then on the Wednesday, Tuesday flip, we were then more risk off, and we dumped. So everything is linked. All you got to do is find the correlations, and it will just paint the picture for you. That's all it is. Charts, it's just a picture. You look at it, it's a story. It will tell you the story. So that is what I've basically found quite interesting on the dollar. I think obviously it's quite important to talk about Bitcoin this week. That is chart, but we'll deal with it. So, Bitcoin this week. Interesting. Very interesting. Interesting week on Bitcoin. So, we can see that, again, we were more risk on. We saw a Bitcoin rally. Then we were more risk off Wednesday. There we go. There's the Wednesday, Tuesday flip. And we sold off. How about that, guys? You take a look at ES again. Oh, look, we rallied. Then we dumped. Oh, look, what a surprise. ETH. Let's take another look. Oh, look, we rallied. And then we dumped. Guys, this stuff is very easy once you just see the correlation. Well, not easy isn't the right word, but everything starts to click and make a hell of a lot more sense when you just start looking at how asset classes are correlated. Like how money moves around and why it moves in certain ways, and it just starts to make a lot of sense. So let's go and take a look at the Swiss franc, for example. So this is the start of the week. So start of the week was Swiss franc is interesting because it's not particularly always driven by risk sentiment. So obviously it's very current. It's obviously very commodities based as well. So we sort of rally. We sort of rally in the franc, and then we saw a sell off, and we almost closed back where we started at the start of the week. Let's take a look. Let's take a look at the euro. Oh look, funny enough, that's what I called upside on the euro. Had the area marked out. What do you know? Took the high, but this is the Monday. We saw a rally. we were, a bit more risk on, and then we saw a sell off, and we were more risk off. Take a look at the Australian dollar. This is the start of the week. We rallied, we were risk on, then we were risk off, and we sold off. Same story with the New Zealand dollar. They're basically the same. Japanese. Start of the week, we rallied, then we sold off. Everything is so like everything in financial markets is just all interconnected in some way, and all you have to do is just use it. So we've covered digital assets. Let's cover commodities. Copper. Copper. Interesting one, isn't it? Rallied, sold off. Huge sell off, huge rally. Iron ore. We were pretty much left range bound this week, although we did see a sell off at the start of the week and then just, like I said, made range bound. Interesting. Platinum, start of the week, made the high of the week, and then we dumped. Oil. So yeah, we saw that initial push up, and then on Thursday we sort of retraced a little bit, and we faded that retrace. Coffee, that's a pretty simple story. You can see what happened there. Same. Sorry, cacao. We're gonna call it cocoa or cacao. I don't know. And then obviously coffee. Start of the week rallied, sell off. Pretty simple stuff, guys. I believe. Oh, actually, to be fair, I guess we can cover my holdings as well. Just generally not, just generally not a great week. Especially not for UNH. That was rough. The earnings was rough. It is what it is. I don't really think there's like Duolingo. We're in the mud on Duolingo. Take a look at this. This is horrid. Yeah, I'm down like 40. No, I'm not down 50%. I'm down like no, I'm down 50%. Oh god, it's not a big holding of mine, so it's fine. I think that might be everything. Oh, silver and gold. Yes, silver and gold. Silver. Look at this, guys. This is bonkers. Look at that sell off. A sell off of almost 40% from the highs. You ain't going to be seeing a bargain like that come around much longer for, a while. This is the most we've we sold off in decades. Same with gold. I think this is the most we've sold off in gold in like one day or something. For like decades. I'm talking like back in the 1900s somewhere. But as you can see, big sell off in precious metals. But I did cover that right at the start of the video on the USD rough recap. I think that might be everything, guys. Not really too much to mention apart from like the altcoins. Hype performed well this week. If it will let me load, yeah. Start of the week, we're up like 50, 60% on my holdings. Not too bad. I probably should actually add that to my thing because I do actually have holdings in that. Sui sold off. Doge sold off. XRP sold off. I forget that that's a part of it. Pound. We saw the rally start of the week, and then we just sold off. I think that pretty much covers it for a weekly recap, guys. I don't really think there's too much else to cover. How long was this video? I've got no idea. Oh, 20 minutes long. That's perfect timing. If you would like to know what platform I'm using in terms of this, cognitoupdates.com/app/macro or /app. Get on it. It's sick. I don't need to say any more. You can see all the features at the top. Research, calendar, news. There's even a chat. You can chat with the guys. You can chat with me. I'm there. I talk. Let me show you. Um, where am I? There we go. F3. I talk on here. Not too active, but it's going to pick up, guys. I promise. There's a journal, there's tankers, there's an AI analyst on your trades. Stock section's coming soon. Crypto section's coming soon. It's sick. Get at it. If you're a trader, this is very good for fundamentals. Very easy to incorporate into your trading. It tells you everything you need. Obviously, this is just good because I can see. It's just for me. It's just a complete breakdown. I don't have to go and do my own research. It's just there for me. Um, it's a great price. I've got a discount code. I shall stick it in the description below as well with a link. Get on it because, like, seriously, it's sick. It's only going to get better. So if it's already sick, and I know the guys are working seriously hard behind the scenes to get this app flowing. Like, I've literally had no bugs, nothing. It's sick, man. The people who own Cognito, they're very similar to my age. Uh, and yeah, they're good guys. So even if it's, just trying to support them in some kind of way, drop Cognito updates, a follow or something on Instagram. I think they have a TikTok page. Yeah, they have a TikTok. Uh, and for sure, check out the app because the app is awesome. Gives you everything you need. But I think that's enough rambling on. I do have a discount code, like I said. It's F3. I'll put the link and the discount code in the description below. You can use it or you can not use it, but if you use it, I promise you at some point I'll buy a camera. So everything that I earn will be invested into somehow at some point making these videos better. I'm just trying to bring as much value as I can, and hopefully you guys are actually just enjoying the sort of raw footage and realness of the content because that's what people have been saying they've been enjoying, and that's what I like about it. It's very me. I'm not, just chatting shit. Uh, there will be a weekly outlook at some point as well. I'm gonna obviously record a video talking through what positions I'm gonna be taking or what positions I'm looking at. Uh, if you don't watch the other video by the start of next week, hope you guys have a good weekend. Um, and you stay safe because the weather is raining right now, so it's not looking good in the UK. Hopefully, I can try and get out of there ASAP. Cheers, guys. Hope you had a good watch. Drop a comment, or drop a like if you got to the end of the video, so I actually know who's getting to the end of the video. Because I'm getting in between like 10 and 20, 30 views, but I don't know who's watching to the end of the video. So it would be good to find out who's actually watching. Drop a comment, drop a like, drop a sub if it's your first time here and you enjoyed the content. Because I assure you, this is just going to be a constant churn of content every weekend for me. Just showing you guys. It's just a nice way for me showing you guys what I'm trading and that kind of stuff. So I appreciate it if you've gotten to the end of this video. Big love. Drop a comment if you did. Drop a sub if you haven't. Drop a like. Anything. At some point, I promise you, I'll get a mic and I'll get a camera. But as for now, just trying to bring value instead of quality. Bosh.